welcome to the Real Estate Tax Tips channel. My name is Cherry Chen, a chartered professional accountant located in Oakville, Ontario, Canada, and I'm on a mission to become the Google map for hardworking Canadians seeking financial freedom. Today, I have a very special guest, a very close guest to myself, my husband, Erwin here. But before I let you introduce yourself, I'll ask everybody to give us a thumbs up because it's rare to get him on my show. And make sure you hit the subscribe button below. And so what are we talking about and who are you? Why do people need to listen to you?
We've done a lot in real estate. I've been a landlord since 2005. It's been an arduous journey. I've had a lot of success. My team and I have helped clients transact on about $440 million in income properties. So we've done a lot. Been awarded Realtor of the Year to investors 4 times. I have about 45 clients who are self-made millionaire real estate investors. And specifically, those are investment properties that they bought in order to become millionaires and multimillionaires. Over 300, somewhere around 350 past clients. We've done a lot.
And what's up with all these like shield and the sweater?
Well, excellent question. I'm glad you asked. Honestly, we would like to be the Google Maps for disgruntled Canadian landlords to make their way down to the States in the most easy way possible for what we believe to be a more profitable, higher cash flow, less risk, scalable mortgages. It's just, the opportunity is just so much better than what it is here.
So I guess the reason why I have Erwin on this particular episode is because I just want to share with everybody our little journey in terms of starting to invest in the US. And I know a lot of you have already owned properties in the States. And for us, this is the first time. And I mean, the canvas is so big, literally. And that's the reason why I have him here. He has been on his phone. I think he has been on his phone ever since the day that I met him. He's on his phone like 80% of the time when we're together. And so recently, his latest research project, he told me he does research. I don't know if that's true. But he told me his latest project is about investigating where we should be investing in the States. Can you tell our audience where we are going to invest in? Because I know a lot of people in the audience would like to invest in Florida because we're so close to Florida and we vacation there, and sometimes we can just go there and use the property as well. So can you tell us if this is a good place to invest in, and can you tell us if that is not a good place, where would we be investing in?
Well, first off, I'm on my phone a lot, and I'm on the internet a lot because I'm doing a lot of research because I am incredibly risk averse. That's why our existing portfolio is an accumulation of all the best practices I've found through networking, reading books. Just been around a long time. We've also earned our battle scars. The connections I've made in the States, the opportunity is just way easier. There's no LTB. It's 30, 60 days to get rid of a bad tenant. Versus, I have clients who are, like a year without rent, which seems to be almost the norm these days here in Ontario, not so much in the States, such as like Florida or Texas or Georgia. Now, again, I've done a significant amount of research into this as well. The insurance risk is just way too great in Florida. Many insurers have already gone out of business or exited Florida. So to me, I have enough stress in my life. I stress it when hurricanes are heading towards our friends' properties in Florida. I couldn't imagine if a hurricane was going towards our own investment property. So Florida is not, America's a big country. There's so much to choose from. What I don't feel right about being in the way of natural disasters.
So then where are we going?
We're keeping it really boring. And again, in my research, the top 2 destinations for REITs in the States is Atlanta and Dallas. So those are 2 of the 4 areas on our list, specifically North Dallas and North Atlanta. And also we'll be looking at buying property in and around Austin, Texas, and Savannah, Georgia.
Okay, can you tell me what the selection criteria, because you said that you did the research. I'm testing him right now. Not believing him that he's actually doing the research, but what kind of research criteria are you looking at?
I'm old school, so I consider Don Campbell my mentor. He's the best-selling author of Canadian real estate books in all of Canada for all time, and he will tell anyone start with the economic fundamentals. What drives incomes and population growth? Canada, Ontario, GTA has benefited heavily from immigration, which is a form of population growth, which has pushed up prices, right? And now I'm looking in the States, which is where will people move to? Where is population moving to? So one thing that drives populations is income growth. Who makes lots of money? People in manufacturing jobs. And the Americans are investing billions and billions and billions of dollars to create thousands and thousands of manufacturing jobs. So these will be brand new jobs. So for example, when I say Savannah, Georgia, we're going there because Hyundai is investing $7.6 billion to create 8,500 manufacturing jobs, which and that investment number is the largest in the state of Georgia history, right? So, and to give context, state of Georgia is bigger than British Columbia.
Oh, so the entire British Columbia.
Yeah, the state of Georgia is bigger than the province of British Columbia. So it would, if Georgia was a province, it would be the second biggest province after Ontario in terms of population. So we're looking for economic growth. For example, we're specifically targeting Austin, Texas, because just last week, Samsung announced their third microchip manufacturing plant, their second in Taylor, Texas. It'll be about a $20 billion investment to create somewhere around 2,000 manufacturing jobs. We have somewhere around 6,000 jobs approaching an area of that's not that big in population. And one thing I like about Austin is the prices have come down significantly since rates went up. So just practicing Warren Buffett practices, we're going to pick up a great asset at a good price. And again, there's no rent control. Landlords have all the rights. And so, yeah, hope to pick something up on the cheaper side and with some expectation of future appreciation.
So, okay, so I get it. Now, like you're saying that there are job growth in the areas that we're investing.
Yes, massive job growth, historic levels of job growth.
Okay, so if that's the case, so then there are more skilled labor moving into the areas that we're going to invest in, and therefore there's more demand for housing.
Yes.
And therefore it will drive the value of the properties up.
Yes, because also these people will be making high income paying jobs. The average salary for these people will be like 56, 58,000 plus benefits.
US dollars.
US dollars.
Yep.
So translate that to Canadian, that's almost $80,000 Canadian, which is above the household average income for a Canadian. So, and I appreciate I believe state of Georgia, the average income is 30,000. So someone who works at one of our tenants will likely be making almost double the state average. So they can afford our home, which will be somewhere under 300,000 and our low $2,000 rent a month.
Yeah, that sounds amazing. Amazing tenant profile.
Amazing tenant profile. And again, we as the landlord will have all the rights. 30, 60 days to remove a tenant that doesn't pay rent or decides to cause damage to the property. There's all these other nice things as well. We can charge for pets, right? If we don't like the tenant after the lease is up, we can just give them 30 days notice to leave. Again, the landlords have all the rights. And again, the financing's easy, way easier than here because it's all commercial style. So if the rent covers your hard costs, you get a mortgage. That's pretty much it. Right.
Just like running your own business. It's the same. You need to make profit and then you can qualify for financing. Here, you qualify for financing using your salary because your salary is your only income coming in. Now, I do have a question. So you know how back in 2008, there is that financial crisis and housing bubble and all these things. What is the risk of having that repeated in the States again? And are you confident that this will not be repeated?
For example, like the mortgages that we're getting in the States, because we're investors, we're having to get a 30-year fixed mortgage. So, and that's largely what's out there in the market. So people are having to, Americans in general are quite comfortable with their mortgages because they locked in for like 2, 3, 4% for 30 years. Versus here, as Canadians, we know there's lots of people, including ourselves, who have to renew in the next 2 or 3 years at like double the interest rate. So we Canadians are feeling way more shock. We Canadians actually have significantly more debt than the Americans do too. So we talked about the Americans failing, like having a financial crisis in 2008. Canada never has. So my worry would be that we'd see something major happen first in Canada before we'd see it happen in the States, right? So I'm not saying investments in the USA is with risk-free. I just believe it to be considerably less risk than anything in Canada, right? So of course, there's no guarantees that there won't be another financial crisis, but the last country or last currency to fail will be the US dollar.
Okay, so now I have one more question. These are all, I think, all my questions, to be honest. So we know that the interest rate has been high, and then the rumor on the street is that the U.S. economy is doing great, exceptionally well.
It's doing exceptionally well.
So they're not in a rush to lower the interest rate.
They have no reason to be.
Yeah. So then their interest rate will remain high in the foreseeable future. How is the cash flow of the property going to cover the interest rate as well? High interest rate. I guess my question is, do we have enough money? Can we make enough rents to cover the cost of operating the rental properties?
So I don't have a crystal ball. If I did, we would probably be in the States a lot sooner than we have been. So keep in mind, if the rates don't go down, it's because the economy is strong. If the economy is strong, it means our tenants are making more money. So, and because we have more rent control, we can raise the rents and slowly improve our cash flow over time. Now, Jerome Powell did say 3 cuts this year. I don't think it'll happen because the economy is too strong, but there will be cuts. So we will see price appreciation there. And then in turn, we're going to see a weakening of the Canadian dollar because everything's connected. Our economy is not as strong. The American unemployment rate is 3.8. Here's 6.1, and we're going up, right? And we're seeing, and as we're recording, we're near, I think we're near the 2-year low for the Canadian dollar. So again, nothing's perfect, but all of this to me says everyone should be diversifying. Making some money in the US, having some property in the US. Because most of our clients have over 90% of their wealth in Canada.
Yeah, so those are great information. So how are we going to manage all these properties? We're so far away from where we're going to invest in. How are we going to manage all these?
Excellent question. Because in my research, I've spoken to many investors who own like a dozen or more properties in the US, and they've been owning them for over 10 years. They made a lot of money too. So from my research, the greatest risk is property management. But again, no investment's risk-free. Here in Ontario, I tell my clients all the time, your greatest risk is something happening to your tenant. Either they lose their job or they get divorced, something like that, and then they stop paying you rent. And then after that, we've had 3 of our properties flood, right? And it's the basements that get destroyed. $10,000 deductible each time. Where we're investing in the States, the southern states, doesn't get cold. There are no basements. Our flood risk basically collapsed to almost 0, right? So then, now we're down to property management. Property managers here, anyone who's listening knows, almost all property managers in Canada who work with small mom and pop investors like ourselves, they're all small themselves, right? I think our biggest property manager we've ever worked with had like three full-time people. Versus when we're going to the States, because we're using an asset manager, we're working with property managers that have like 1,000, 3,000 doors in the city. So they have an enormous scale, they have systems, they have staff on payroll. So that brings down our cost of repairs, maintenance, leasing fees, all those sorts of things. They're going to be much more reliable. So how we're managing is I got introduced to an asset manager, a fee-based asset manager, back last summer, and they only charge fees, but they take no equity, and they take no profit share. So we have an incredibly qualified joint venture partner, essentially, who we only pay fees to.
That's not joint venture partner. Joint venture partner means that they take equity. So this is totally different.
This is like a joint venture that most people are familiar with. You have an expert who's going to put the deal together and manage everything. We have a similar relationship, but again, we're not giving up any equity nor control. Like we will own the asset. It'll be our entity that owns the asset. We control it entirely. We pay fees to the asset manager. And they're from the institutional investment world, so they have relationships with the largest property managers in America. And because we're working with the largest property managers in America, we're able to diversify. So I mentioned we're investing in 4 cities, my plan is to own property in all 4 cities.
Well, that's his plan. I haven't figured out our plan yet. But if you guys are interested in joining us on this journey, we are going to host a workshop. The exact day will be in our caption here below. Make sure you hit the link in the show notes below, and you would be able to join us for a 3-hour workshop. You can join us live in person, and you can join us also virtually, so then we can walk you through step by step where we're investing, how we're investing, and the legal structure that we're going to invest in. We may even have a mortgage expert there to present to you guys on how to get all these mortgages in the States, because I also need to know how to get these mortgages in the States as well. So thank you so much for sharing all this information with our audience, our 20,000 subscribers here.
Wow.
Yeah. So until next time, happy Canadian real estate investing.